Ambrish Baliga as well joins in to talk about the market. Ambrish, hi, afternoon. What have you made? What have you made of the little bit of a roadblock that the Nifty has reached today?
I think this, roadblock is there to stay. I think we should be in this range of 5,200, 5,300. I think crossing this level will be quite difficult because in spite of all the good news which is there, whether it's advanced tax figures or IIP data, monsoons, GDP estimates, which are much better than what we were talking earlier. In spite of all this, if you're not able to convincingly cross these levels, so that clearly shows that there is no conviction in the market at this point of time that it can go to those levels of 5,500. So clearly, we are seeing supply coming in at this point of time. So I think, over the next 2 months to 3 months, I think we'll be be in that broad range of 4,700, 4,800 to around 50 to 5,300.
Ambarish, so in your view, what comes first, 5,000 on the Nifty or 5,400?
No, surely, it should be 5,000 or possibly even 47, 4,800 on the Nifty before, we see that 5,400, 5,500, because clearly I think the Eurozone issue is still there. I think it will continue for a while longer. And whenever there is any sort of, adverse news coming in from that region, clearly you'll see FI selling coming in, and that itself will take the markets down.
Ambarish, your thoughts on the entire auto space and in particular Tata Motors. There was a lot of concern that, perhaps Europe and its exposure there would spoil the party for Tata Motors. But it's come out and surprised everyone with its global sales for the month of May. So at a price of say around 785, would you be a buyer in Tata Motors now?
Global sales have been good. Domestic sales have been good for most of the auto companies for a while. But I don't think this party can carry on for much longer than now. Possibly the figures for June could be could be record, could be as good. But I think going beyond that, I think the base effect will come into play, which I don't think the market has yet discounted. So once we start seeing those figures which are tapering off, I don't think the markets would like that. And possibly at that point of time, we will have a decent correction in most of these auto stocks. In fact, we feel that a stock like Tata Motors can actually see levels of around 575, 600 possibly over the next 4 to 5 months.
Ambrish, but, what does one do with the market? Risk appetite is surely back into the system, but then the rich valuations have pretty much put a lid on any kind of significant equity growth from here. At about 15 times forward earning, this market looks to be a little more expensive, especially for heavyweights. What would you advise investors now? Because clearly there seems to be a lot of incremental buying in the broader universe as well.
In fact, like I said, since the market is in that range of 4,700, 4,800 to 50 to 5,300 levels, so I think at these levels one should become as light as possible. I won't say that one should exit the markets totally, but wherever you're making good profits, I think it's time to start exiting, get into cash, because once you again start seeing those levels of around 5,000 or below, that's the time to again start investing again. Because I think over the next, like I said, 2 to 3 months, 4 months, we should be in this range. So I think one should play, in this range itself. Sell at the higher levels and get in, again below 5,000 levels.
Okay, but Ambrish, what does one do with Reliance at this point in time? Lots of people have been talking about how there's a further upside because of so many important cues coming in, being it the MOU or, M&A talk doing the rounds. How much of a potential upside do you see for Reliance Industries from here on?
Reliance Industries, I think there's a huge upside potential. In fact, we've been talking of those levels of 1,400, which is refusing to go towards, at least in the last, 6 to 8 months. But I think by possibly January, February next year, once all these things settle down, possibly you should see those levels of 1,400 plus. So, at these levels, we are quite bullish on Reliance Industries.
Ambarish, you were talking about Reliance, but what about the ADAG pack? You have Reliance Industrial, Infra, all of them are holding up with very smart gains. RNRL, Reliance Communication. What's your top pick over there?
There's no top pick in that sector as such, because Reliance Communication has already moved up decently well from those lower levels. So I think from here onwards, looking at the way the telecom sector as such is doing, I don't think it can really move up much more. I think the other stocks in that pack is more of a speculative move than a fundamental move. So I think it's more of a trader's pick at this point of time than a fundamental buy.
What are your thoughts on the entire banking space? Because they're the ones which usually come out with very robust advanced tax numbers. But this time around, it's been quite muted. So SBI's was, I think, slightly lower on a YOY comparison. ICICI has been pretty much flat. Nothing great to report even from the foreign bank. So how would you position yourself on banks in FY11?
Although we are positive on banks over a longer period of time, but we feel that possibly over the next 2 quarters, there could be pressure on net interest margins. I think the NPAs also will slowly inch up. And looking at, at least another 7,500 basis points increase in interest rates possibly over the next 6 months, I think it is time to stay out for the time being, wait for lower levels to buy these stocks. I think a stock like SBI should be a good buy at levels of around 1975-2000.
But Amrish, just extending that point forward, ahead of that meeting on the 27th of July, there's been a lot of these interest rate sensitives who've been very nervous because of some sort of intermeeting rate hike that the market has been talking about. How would you deal with the other interest rate sensitive pockets like autos perhaps?
Especially, I think auto, it's a good time to sell because, already we would be having increase in the auto, prices as such. And along with that, if you have the interest rates moving up, I think that will be a double whammy. So I think it's time to exit this, like this space when the going is good.
Rish, what would you do now with with any of these heavyweight IT majors? Do you see significant upside from here? And what would your top picks be?
I don't see too much of upside from here for stocks like Infosys or TCS. So at these levels, possibly I'll book out at least to a certain extent. In fact, I think Infosys should see levels of around 2,200, 2,300. I think at those levels it becomes a decent bet because clearly I think one worry is rupee, which possibly could see those levels of 44 quarter again around October, November this year.
Amrish, about this entire oil and gas space, there's been a lot of toing and froing when the EGOM meet will be held, whether there will be actually a fuel price revision. At these current market price, post yesterday's correction, BPCL at around 530 and ONGC at around 1180. What is it that these prices are actually factoring? A complete inaction by the government or perhaps, a partial deregulation?
Inaction possibly for the next 2 or 3 months, but surely there should be regulation possibly over the next, 6 to 8 months. So the way I see it is in case these stocks fall further, especially stocks like BPCL, HPCL, fall another 10% from here, I think you can buy it for the next speculation as to when the price rise will happen. So I think, if you hold for the next 6 months, I think you should get a return of around 25% from these levels. The next time again there are talks, of deregulation. So I think it's a decent return from those levels.